The screenshot is still burned into her phone gallery. A portfolio that once looked like a miracle now looks like a bad joke. Green candles everywhere. Unrealized profit in 5 figures. Friends texting, "You're a genius." A cousin asking how to buy that coin that's going up. And then, 2 weeks later, Maya is sitting on the edge of her bed at 2:13 a.m., refreshing the chart like it's a heartbeat monitor, watching the same numbers shrink with every candle. Not because the project died, not because the market ended, because she did what almost everyone does in a bull run. She made money, and then she gave it back. If you've ever looked at your screen and thought, "I was up so much, how did I end up here?" This video is for you. Today we're building one simple thing, an exit ladder. A DCA Out Crypto plan that takes you from hype to discipline, without trying to call the top, without begging for one more pump, and without waking up one day realizing your bull run gains round trip back to zero. No magic predictions, no secret indicator, just a clear set of sell rules that protects your capital, protects your sanity, and, most importantly, protects the future version of you from your current emotions. Maya didn't come into crypto because she loved technology. She came in the way millions of people come in, through personal finance. She had done the responsible stuff first, built a small emergency fund, paid down some debt, started investing in broad index funds, watched boring money grow slowly, like grass. And then one day, a friend at work sent her a screenshot. "Bro, I made 3 months of salary in 1 week." At first she laughed. Then she asked the question that changes everything. How? The next weeks were a blur of late-night YouTube videos, TikTok clips, Discord invites, and group chats that felt like secret tunnels to a different life. The language was addictive. Early, rotation, narrative, alpha. It didn't sound like investing. It sounded like access. She told herself she would be careful. "I'm not going to be the person who buys the top." So she started small. A little Bitcoin, a little Ethereum, because everyone said those were safer. As I'm recording this, BTC is trading around $87,000 and ETH is around 3,000. Numbers that would sounded insane a few years ago. But in a bull run, insane starts to feel normal. The first win is the most dangerous one. Bitcoin moved, her portfolio turned green, and Maya felt something shift in her body, the quiet confidence that comes from being right. It wasn't greed yet. It was pride. She began to check prices during meetings. She stopped listening to podcasts and started listening to charts. Then came the temptation. You're being too conservative. The real money is in alts. A new coin started trending. The story was perfect. AI, DeFi, memes, whatever the season wanted. The chart looked like a staircase to heaven. The community was loud, funny, relentless. Someone posted, "Whales are accumulating. This is the next big thing." Another said, "If you're not all in, you don't deserve it." Maya didn't all in. Not at first. She positioned. A small buy became a bigger buy. A bigger buy became a "I'll just move some from ETH." And the moment the coin doubled, her brain rewrote history. "See, I have a gift for this." She began to plan her future using unrealized profits. A nicer apartment, a car upgrade, a resignation letter she never sent but daydreamed about. Her family didn't understand crypto, but they understood numbers, and she started speaking in numbers. "I'm up 40%. I'm up 70%. I'm basically there." Then the market did what the market always does. It tested her. A sharp dip hit. Maya watched her profits fall and felt her stomach tighten. She told herself the classic sentence, "It'll bounce." It did bounce, just enough to calm her down, just enough to teach her the wrong lesson. Hold through fear and you'll be rewarded. So the next dip, she held again. Then a bigger dip. She held again. And somewhere in the middle of all that, she stopped being an investor and became a hostage. Every decision was delayed. Every sell felt like betrayal. Betrayal of the community. Betrayal of the future she had already spent in her head. She saw people online screaming, "Diamond hands," and she wanted to be strong. She saw others bragging, "I'm never selling," and she wanted to be loyal. And deep down she had one secret fear she never said out loud. What if I sell, and it keeps going up without me? So she didn't sell. Weeks later, the chart didn't crash in one dramatic candle. It bled. Slow. Humiliating. The kind of red that doesn't feel like danger, it feels like shame. Maya stopped opening the app. Then she started opening it again, obsessively, like checking a bruise to see if it's still there. One night she finally did the math. She wasn't up anymore. She wasn't even. She had round-tripped. All those screenshots, all that confidence, all those plans vanished. And the worst part wasn't the loss. The worst part was the sentence that kept looping in her head. I didn't need to time the top. I just needed a plan to take profits on the way up. That's where our story turns. Because the moment you admit that, you're one step away from building the exit ladder most people never build. Maya's story is painful, but it isn't rare. What happened to her isn't a bad luck story. It's a human behavior story, and crypto just amplifies it because everything moves faster. Start with the psychology. In a bull run, your brain gets trained like a slot machine. You pull the lever, buy, you get a reward, green, and your brain learns, do it again. When the chart goes up, dopamine doesn't feel like chemicals, it feels like destiny. That's why people can go from cautious to reckless in a month. The market didn't change their IQ, it changed their emotions. Then there's the fear that drives almost every bad decision in crypto. FOMO. Not just fear of missing a coin, fear of missing an identity. In communities, the winner is the one who held the longest and sold the highest. So you don't just fear missing money, you fear missing status. Greed is the obvious villain, but it usually hides inside something more socially acceptable: hope. I'm not greedy, I'm just waiting for a better exit. Hope becomes a way to avoid the one feeling humans hate most: regret. If you sell and it pumps, you feel stupid. If you hold and it dumps, you can blame the market. The brain prefers the pain you can explain. Now add a second layer: lack of a system. Most people can explain how to buy, very few can explain how to sell. Sell when you're happy sounds wise until you realize happiness is a moving target. The first time your portfolio doubles, you think, if it doubled once, it can double again. The goalpost moves, and suddenly there is no enough. Without rules, you don't have a strategy, you have a mood. That's why people confuse long-term investing with long-term holding. Investing is a plan. Holding is an action. If you can't answer, what would make me reduce risk? You're not investing, you're hoping. Risk management is the part no one wants to hear in a bull run because it feels like pessimism. But it's actually respect. Respect for volatility. Respect for liquidity. Respect for the fact that your coin can go down 30% in a day without warning, and the market will not apologize. The third layer is the environment. Crypto content can be educational, but the algorithm often rewards extremes. The loudest prediction, the biggest target, the most dramatic thumbnail. In that world, nuance looks weak. The calm creator doesn't get clipped into virality. The person screaming, "This is going to zero," does. Group chats turn into echo chambers. Someone says whales are buying, another says this is programmed, and suddenly a random chart becomes a prophecy. You stop thinking in probabilities and start thinking in narratives. And narratives are powerful because they turn uncertainty into a story you can believe. This is where the market becomes toxic in a very specific way. It tells you that selling is cowardice. That's why so many people round-trip gains. They didn't fail at analysis. They failed at identity. They didn't want to be the person who paper-handed. They wanted to be the person who held like a legend. But here's the brutal truth. The market doesn't give trophies for holding. It doesn't care how long you waited. It doesn't care that you deserved the next pump. It doesn't care that you were early. If you don't have rules, you become liquidity for someone who does. And selling is the moment rules matter most, because selling is where every emotion attacks you at once. Fear of missing the top, fear of being wrong, fear of looking dumb, fear of watching others get richer without you. So if we want Maya and you to stop round-tripping bull run gains, we don't need a better coin. We need a better exit behavior. And that's exactly what a DCA Out Crypto exit ladder is, a set of actions you do on purpose before your emotions try to do them for you. Here's the unpopular thought that will save you money. In crypto, your biggest enemy usually isn't the market. It's the fantasy version of yourself you build when you're up. When Maya was green, she wasn't just watching numbers. She was watching a new identity being born. I am the person who cracked the game. That identity feels amazing until the chart asks you to prove it. And that's why the bull run is dangerous. Not because prices go up, because prices going up removes friction, and friction is what keeps your character honest. People love to blame whales, market makers, manipulation. Sometimes those forces are real, but blaming them can become a narcotic. It lets you avoid the hardest truth. You clicked buy, without an exit plan. You held without rules. You chased without risk limits. The market didn't force you to do that. Another uncomfortable truth: you don't need to win big to lose big. A lot of people think the disaster is buying the wrong coin. But the most common disaster is buying the right coin and still failing, because you never learned how to take profits. A coin can do a 3x, and you can still end up down if you convert a win into a permanent hold. That's what round tripping is, turning temporary wealth into permanent regret. And here's the part almost nobody says out loud. Selling is not one decision. Selling is a sequence. Most people imagine the perfect exit like a Hollywood moment. One heroic click at the exact top. That fantasy is why they don't practice selling. They're waiting for a moment that doesn't exist. The top is not a candle. It's a zone. And in that zone, your brain is unreliable. So the contrarian move is simple. Stop treating selling like a judgment of your intelligence. Treat it like a job. If you can follow a morning routine, you can follow an exit routine. If you can pay bills automatically, you can take profits automatically. If you can set up a monthly savings transfer, you can set up an exit ladder. Because the goal isn't to be a genius. The goal is to be consistent. This is also why "I am only playing with small money" is a lie that hurts you. Small money is where you build habits. If you gamble with $200, you're practicing gambling. And when you have $20,000, you'll gamble with that too, because your habits don't scale safely. And for the serious traders who want big size and big trades, hear this clearly. Size doesn't create skill. Skill earns size. If you can't take partial profits on a small position, you won't magically do it on a huge one, because the emotional pressure will be 10 times worse. Think about the two most common messages in a bull run. The first is, never sell your Bitcoin. It's built on a true idea, long-term conviction matters. But people twist it into a religion. They forget you can keep a core position and still take chips off the table. That's not betrayal. That's portfolio hygiene. The second message is, bro, this is going to the moon. It runs on social proof. When thousands of strangers repeat the same target, your brain stops asking how and starts asking, what if they're right? This is why the exit ladder is such a psychological weapon. It breaks the spell. For the long-term investor, it prevents you from turning a life-changing opportunity into another multi-year reset. For the degen who loves leverage, it's the difference between "I was right" and "I got liquidated anyway." For the business owner diversifying into digital assets, it's the difference between a controlled allocation and an emotional roller coaster. For the MMO or freelancer using crypto as payment rails, it's simpler. You don't want your rent money to depend on a candle. You want a process. The market will always be louder than your plan. So your plan must be stronger than your mood. So what can we control? If we can't control the market, we can control 3 things: how we size risk, how we pay ourselves on the way up, and how we protect capital when the mood flips. Maya didn't need to predict a crash. She needed a system that turns profit into safety before the market asks for it back. So let's build it, not in theory, as a ladder you can follow even when your hands are shaking. Let us build the DCA Out Crypto exit ladder in a way that works whether you are a long-term holder, a part-time trader, or a full-time degen who loves adrenaline. This is not financial advice. This is a behavior system. Step 1. Define your why and separate your buckets. Before you touch the sell button, label your holdings. Not by coin name, by purpose. Core, the position you're willing to hold long-term because you understand what you own. Growth, higher volatility positions where you want upside, but you're not married to them. Casino, the money you can truly lose without changing your life. If you can't tell which bucket a coin belongs to, that's already the answer. It doesn't deserve size. Maya's mistake wasn't buying an alt. Her mistake was treating every coin like it was core the moment it went up. Step 2. Decide what paid means for you. Most people say, I'll take profit when it's high. That's not a rule. A rule is, when this doubles, I take back my initial capital. Or, at 2x, I sell 20%. Or, every time it moves another 25%, I scale out. Pick one definition of paid that fits your personality. Commit before you're emotional. Step 3. Build the ladder. Levels, sizes, and destinations. A ladder has 3 parts. Level, the price zone or condition that triggers a sell. Size, how much you sell at that level. Destination, where the proceeds go. A simple ladder you can adapt. First rung, Take back your initial capital. Destination: safety, cash, stablecoins, or another reserve you trust. Middle rungs: sell small chunks as price expands. Destination: rebalance into core assets, pay taxes, or build dry powder. Final rungs: leave a moon bag on purpose. Not greed, strategy. It's your permission to stop obsessing over the top. The destination matters because profit that stays in the same risk bucket isn't really profit. It's just numbers on a screen. Step 4. Add rules that protect you from yourself. This is where most ladders fail. People create levels, then ignore them. So you need constraints. Use limit orders or alerts so you're not making decisions in panic. Pre-decide what you do if price drops hard after a rung sells. Pause, or keep following the plan. Decide what you will not do. No revenge trades. No doubling down because it has to bounce. No turning a ladder into a gamble. If you trade futures or margin, your ladder must be even more disciplined. You don't just take profit, you reduce liquidation risk. Every time the market gives you breathing room, you use it to lower leverage and move stops. Leverage rewards precision, but it punishes ego. Step 5. Review the ladder like a professional. Once a week, Maya started doing a ritual. What did I do well? What did I do badly? What rule will I tighten next week? One more practical note. Destination also includes custody. If you take profits and leave everything on an exchange because it's convenient, you've only moved from market risk to platform risk. If you move into stablecoins, you've swapped volatility for a different set of risks: issuer risk, degens, and counterparty exposure. Choose with open eyes. If you're managing serious size, your ladder should include real goals. Some goes back to long-term investments, some becomes cash reserves, and some stays in crypto by design. DCA Out isn't about maximizing the last dollar. It's about protecting the dollars that change your life. If you've never round-tripped gains, you might think it's just a technical mistake. But if you have, you know it's emotional. Maya didn't just lose money. She lost confidence. She remembered the day she bragged a little too loudly at dinner. It's crazy how fast this moves. She remembered her partner's polite smile that said, "I don't understand this, but I'm happy you're happy." She remembered the silent moment later when she realized she was watching charts more than she was watching her own life. When the portfolio bled back down, she didn't tell anyone. Not because she was hiding a secret, because she was hiding shame. In crypto, the wins are public and the losses are private. People post screenshots of green candles. Nobody posts the night they can't sleep. People talk about conviction. Nobody talks about the stomach drop feeling when your phone lights up with a liquidation alert. People joke about paper hands. Nobody talks about the panic of being responsible for your own money in a market that doesn't T-close. This is why crypto is such a brutal teacher. It doesn't just test your strategy. It tests your identity. It reveals your relationship with risk. It reveals whether you're chasing freedom or chasing validation. It reveals whether you want to build wealth or you just want to feel like you belong to the winners. And here's the lesson that hurts, but heals. You can't build a calm future with a chaotic process. If your plan requires you to be emotionally perfect, it's not a plan, it's a fantasy. If your plan depends on, "I'll sell when I feel it," you're putting your finances in the hands of your mood. And moods are not qualified to manage money. The exit ladder is not only about profits. It's about self-respect. It's you saying, "I will not let a temporary high rewrite my standards." It's you refusing to gamble with your future self. It's you choosing to be the kind of person who can handle opportunity without losing their mind. Maya told me something later that I think a lot of you will feel in your bones. "I didn't realize how addicted I was to the hope of a bigger win until I had to live with the reality of a smaller account." That's when she stopped asking, "How do I get rich fast?" and started asking the question that actually creates wealth. How do I stay in the game long enough for my decisions to compound? There's also a quieter cost nobody talks about: attention. In a bull run, attention becomes your new currency, and you spend it like it's free, on charts at breakfast, group chats at night, and wallet trackers instead of sleep. For Gen Z who feel late to everything: housing, careers, real life, crypto can feel like the only door still open. That feeling is real. But if you walk through that door without a process, the market will teach you the most expensive lesson first. For people with businesses and responsibilities, crypto can be a tool for diversification. But it becomes toxic when decisions happen alone at 1 a.m. because the market never lets you breathe. And for traders who dream about being a future whale, the truth is harsh. Whales aren't just people with money. They're people with rules. They can hold size because their process is boring. The best investors aren't fearless. They're prepared. That's what the latter gives you. A way to act like your best self when you don't feel like your best self. So here's the honest ending. Crypto is not a fair market. It's fast, it's emotional, it's unreasonably volatile, and it can make smart people act like gamblers. But it's also one of the few markets where a regular person can participate in a global, liquid, 24/7 arena that's still evolving. That's why it attracts everyone. The newbie chasing a bull run, the long-term believer, the trader hunting size, the business owner diversifying, the on-chain degen chasing yield, the freelancer using crypto to get paid. Different motives, same risk. Without a plan, the market will use your emotions against you. If you take one thing from Maya's story, let it be this: you don't need to be a genius to win. You need to stop letting one perfect sell be the price of your success. Build an exit ladder. Follow it. Let it be boring. Because boring is what turns opportunity into a life you can actually live. Here's a simple action you can do today. Open your portfolio and label every holding: core, growth, or casino. If you can't label it, reduce it. Then write one sentence for your exit ladder. At X condition, I sell Y%, and send it to Z. That sentence will do more for your future than another hour of chart watching. And if you're sitting there thinking, but what if I sell too early? Good. That fear is normal. The goal isn't to erase it. The goal is to stop obeying it. A ladder is how you compromise with your emotions without letting them drive. It lets you sell some and still participate. It lets you protect capital and still respect upside. It turns "should I sell" into "I already decided." Some of you will watch this in profit and think, "I'll do it later." That's exactly when you need it, because later is when you'll be negotiating with greed. Some of you will watch this in loss and think, "It's too late." It's not. A ladder is not just for selling. It's a way to rebuild trust with yourself. When you follow your own rules once, the next time gets easier. And that's how you become the person who survives multiple cycles, not just one good season. If this video hit you, tell the truth in the comments. Not your biggest win, your biggest mistake. The trade you still remember. The moment you knew you should have taken profit and didn't. You'll be surprised how many people are living the same loop in silence. And if you want to support the channel, like, subscribe, and share this with a friend who keeps saying, "I'll sell at the top." If you're looking for the tools and platforms I use, check the channel description. There may be links there. And if any are affiliate links, they help support the channel at no extra cost to you. Use anything you sign up for responsibly and within the rules of your country. One last thing. In the next video, we're going to dissect the most dangerous trap in bull markets: the liquidity setup that makes you feel like a genius right before it takes your gains back. Because once you have an exit ladder, the next level is learning how the market tempts you to ignore it. Until then, protect your capital, protect your attention, and don't round-trip your future.